Hi, everyone. Welcome back to the show. I'm Roxann Klepper, and this is Brick by Brick. Today, we are talking about all things credit. So, we have a genius mortgage broker with us today, Sarah Astles, and she's with the Mortgage Group. So, 7 years ago, when I first got my real estate license, I had reached out to a bunch of mortgage brokers I wanted to come to open houses with me. Sarah said yes, and we've been doing them together ever since. So, she is going to give us the lowdown and all her information on credit, how to get it, why you lost it, and how to build it back up. So, everyone, welcome Sarah Astles to the show. Thanks for joining us.
Hello, everyone. Thank you, Roxanne,
Thanks for
for
being.
the great introduction.
Let's jump into it. Why don't we start at the beginning? What do you need credit for, and how does it hurt you if you don't have it? For those out there that are new to the topic.
Yes, well, everybody needs credit in order to get credit cards, purchase any kind of vehicles, mortgages, purchase houses. It's essentially to show your repayment history and how you go paying your bills. Now, not everything shows up on there, so it is only lines of credit, TELUS, mobility bills, any kind of cell phone bills. Most mortgages show up, lines of credit and credit cards, and sometimes a brick card, or some don't pay for 6-month kind of loans. And then they're just looking to make sure that you are repaying your bills and you're trustworthy and able to continue doing that. So if you don't have any credit, then they have no way of looking and making sure that you are able to repay that. There is sometimes ways around that in showing that you've paid rent to somebody or paid, say, an insurance bill that doesn't show up on your credit. But if you have absolutely no credit score, they will not allow you to be on any mortgage by yourself.
So it's basically just their way of trusting you with their money and making sure that you're going to pay it back to them.
Yes. And if they don't have a score, they're not even allowed to give you anything without at least a cosigner.
And so every time someone wants to buy something on credit, so basically you don't have the cash to pay for it, you buy for it on credit, a credit score gets pulled. So what tell us about those credit scores? Like what does that look like?
Well, there is a couple different ones. There's consumer polls, which lots of people can do on their own, and we have a lot of clients watching their score on their own. And that gives you a really good idea of where you are, but is not the same poll that a car dealership does or a mortgage broker does, which are two other different polls. As a mortgage broker, we do a Equifax Beacon 9, and a poll that you would do online is a consumer poll that is a little bit different on weighting. They'll show you the same bills and balances, but they'll weight the scores a little bit differently. So if you are always having a credit card close to the limit, that will affect our Beacon 9 score, but it won't affect your consumer poll. So your score might be higher on your side than what it is on our side.
Okay.
So we do have a lot of people calling saying, "Hey, this is what my score is. Can you use that?" And it's a good idea, but it could, I've seen it as far as 100 points off, depending on utilization of some of those cards.
That's a big difference.
Yeah.
And so when you're talking about 100 points, can you explain to everyone the the valuation? Like where does a credit score start? Where does it end? What's the lowest? What's the highest?
Yeah, the lowest is 300 and the highest is 900.
And so
Three
who would
I've
have the lowest? Like what would have to happen for you to be at 300?
I have
Or is that
actually,
just
like, I mean, the normal low score would be like a 450, and that would be having maybe cards that missed 5 payments or more, collections or multiple collections that aren't paid, because, every month you don't pay them and they're reporting, it does hurt you, even once you pay them, they are still reporting but paid, so it hurts you, but not as much.
okay?
Um, there could be bankruptcies, foreclosures, that show up. There could be judgments that would make them lower.
And how about
Anything
the
like
300? Like if a person had just turned 18 and had no credit, would they be at 300 or would they be at nothing? Would they be at
no,
non-existent?
it would say nothing, no
Okay.
beacon score. So it's not like you've opened of your first card and you start at 300. You'd have to do bad things to get to
Okay. Okay. And so tell us if you have a bad score, explain to us how a person would go about making that a good score. Like what's step one?
Well, if you do have any consumer proposals or bankruptcies, they to increase your score immediately, as soon as you pay them off and they report, that would increase it a little bit. And every month that it reports paid, and if you go open another credit card immediately after you pay the consumer proposal or the bankruptcy, if you had one of those, that will increase your score quite quickly. Lenders on our side still have rules on how long you have to have that paid, but at least it would start rebuilding your credit. Things like if you have a credit card, say at 5,000 and you're consistently using it to 4,500, if you increase that credit score or that credit limit and just kept using it to 4,500, that would within probably 30 to 60 days increase it by anywhere from 50 to 100 points.
Oh, wow.
And anything revolving, which is a line of credit or a credit card, always using it to just 50% of the available limit will
Okay.
always increase it really quickly. Using it close to the limit at any given time will decrease it fairly quickly.
Okay. So is the revolving credit, the utilization of the cards, a big hit to your credit every month then?
It can be, like, if you only had credit cards that you were using high and you didn't have any other loans or cell phone bills reporting, it would hit it hard and fast.
Okay.
But also, if we have business people that are always using it every week and paying it off, but they never know when it's gonna report to the credit. So even if you're paying it all the time, if it's always reporting at that high utilization, then it's gonna bring it down every time.
Okay. And so let's say that a person, no consumer proposals, wasn't maxed out all the time, maybe had gotten to a good place, just paying off stuff, but was still starting fresh with a really low credit score. Is there like a low risk way? You've mentioned a couple times about a cell phone bill. So are there low risk ways without opening up a credit card to kind of build that score back up?
There is, it would take a longer time because the the ones that really affect the score the quickest, whether it's up or down, is the revolving credit. And so it just means it's accessible again. Once you pay it, the revolving that you can also access the data game because that to them shows that you're disciplined enough to keep the balance at a good limit, use it, pay it, and not go too close.
Right.
So
And
you could
so,
get loans, but it would take a lot longer to move the score.
okay. So basically, your best bet, no matter where you're at with your credit, if you're trying to build it up, whether it's bad credit or just non existent credit, would be some sort of credit card that you don't go over 50% with and pay off consistently.
Yes, and
Okay.
they are like if you have none, we do have a few lenders that will allow one line, so one card or even one cell phone for 12 months is their kind of minimum cutoff before they will allow as far as a mortgage goes. But majority of lenders like to see two lines, so two counts of any, whether it's a loan, cell phone, credit card, line of credit, for 2 years reporting if you were just new to credit.
Okay. And then, so would the steps be, so would that be for an individual or for a business, or are they the same?
No, just individual. The
Okay.
businesses typically, I mean, as far as mortgages are concerned, we don't pull a business credit bureau. It would only be a personal credit bureau, even if they were purchasing within a business.
Okay. And so for our audience at home, how can they go about pulling their own credit score so they know where they're at?
There is sites such as like Credit Karma and there's some banks that allow you to pull your credit for free attached to your credit card. There's some apps that you can get, and you can use any of those. It's just taking it with a little bit of grain of salt that it might not be the same score that we see, but it will give you a good idea of the balances, like making sure your payments are always reporting on time, and whether the score is going up or down. Because if you know it was at 650 and on your side it was showing at 700, you know it is going up on our side also. It just might have started at 600 and now you're at 650 instead.
And so is that a best practice for people at home? I've heard some people encourage them to pull it twice a year to make sure that there's nothing on there that shouldn't be on there.
Yeah, I think it is a good practice because there is, even lots of clients we come across that their mortgage was discharged and or supposed to be discharged, paid out years ago, and it is still reporting on the credit bureau because it's never been actually closed and discharged, and it's still on title. So, I mean, that's always something that even when you pay off a vehicle loan, that you can check that it's paid and closed as it's supposed to be. Or some credit card companies, if you get in a dispute, might report it as closed by them instead of by you as the consumer, and then that can also affect you. So it's something that you could get fixed if you saw that before you looked at buying anything.
Okay. Well, that's good info. So best practice, pull your credit score, make sure someone hasn't taken out a loan in your name and get it
Yeah,
discharged off
that
your
too.
off your credit score. Okay. I am going to put Sarah's information at the bottom of the podcast so you can reach out to her if you have any mortgage questions. She knows it all, so feel free to reach out. Sarah, thanks so much for helping us learn a little bit more about credit and how people can build credit on their own.